Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about how to invest your $1,200 stimulus check. So unless you've been living under a rock over the past week and a half or so, you know that the Government CARES Act, or the stimulus package that was just passed that I've talked about on this channel, is actually providing $1,200 per US tax-paying citizen and $500 per child. So unless you're claimed as a dependent, you will be getting $1,200 and $500 for every kid that you have if you meet certain thresholds. So the first $75,000, if you're filing single, you will get the full $1,200. If you're filing as head of household and you make less than $112,500, you'll get the full $1,200. And if you're married filing jointly, if your combined income is 150 grand or less, you will get the full $1,200. So this stimulus check is not going to be a tax advance for 2021. It's not going to be considered taxable income. So with all that out of the way, let's get into the three ways that we're going to invest this. So I thought the easiest way to break this down was into a low risk investment, a medium risk investment, and a high risk investment. So let's get right into it. The first way to invest your $1,200 stimulus check is by paying off high interest rate debt. So you're probably thinking to yourself, Marco, this is just paying off debt. This is not investing. What do you mean by this? Well, it's actually the safest investment that you can make, so much so that it's actually a risk-free rate of return, okay? The reason for that is because you have to look at whatever the interest rate is on the debt that you have. And in this case, I'm defining high interest rates, anything greater than 5%. So say, for example, you have a credit card with like $5,000 on it and you're paying, 10, 15% APR on it, okay? If you pay off that credit card debt, you are guaranteeing yourself a risk-free rate of return, okay, of whatever the interest rate is. So in that case, you're making 10 to 15% guaranteed. If you're investing in something like stocks or real estate, yes, there's good times and bad times. It averages out right around 7%, but that's not a guarantee. Look at the past 3 weeks in stocks. People lost 20, 30%, and now they're starting to come back. However, if you do pay off this debt, you are making a guaranteed rate of return. So compounding actually works both ways. So what do I mean by this? So compounding works positively if you're investing in a Roth IRA or a tax-deferred account over time, because stocks make more money over time. Compounding actually works the same way. So say, for example, we go back to that credit card example of 5 grand at 10 to 15%. That's actually hurting you every month because that interest is compounding on top of each other, but in the wrong direction, costing you money, okay? So the only con that I can think of for paying off debt, as mentioned earlier in this example, is by opportunity cost. So if it's not greater than 5%, you should probably leave it because you can make more money elsewhere. So say, for example, your mortgage is 3.5% and you owe 200 grand on your mortgage. It may not make sense to pay off that 200 grand if you can to make a 3.5% return. You can actually take that $200,000 in our next examples coming up. The second way to invest your $1,200 stimulus check is by investing in blue chip dividend stocks as a medium risk option. So the reason I'm going specifically with blue chip dividend stock investing, and you guys are probably sick of hearing me talk about this, especially with my M1 finance portfolio and everything else that I'm doing with these weekly polls. I could have easily put in real estate, equity mutual funds, large cap stocks, all that kind of stuff into this category. But the reason why I'm sticking with blue chip dividend stocks is for a couple of reasons. So there's a lot of opportunity right now with a lot of solid companies that got crushed over the past month and a half. Yes, a lot of them did come back, but if you would have bought maybe like a week or two ago, you could have gotten solid companies with solid fundamentals at a very steep discount, okay? So this is perfect for the long-term person who wants to build wealth and an income later on in life, and it's a great way to start. So this is kind of like the drug dealer giving out samples to get the junkies hooked. That way he gets a way to get recurring business. It's a good example, but I may cut that out. But the reason I'm saying this is because this discount is allowing you to take $1,200, get in the game, see how dividend works, and at that point you may think to yourself, wait a second, I think this Marco guy was actually onto something with this dividend investing strategy. So it's a great way to get started. So why dividend investing stocks, or why dividend investing strategy, excuse me. So the reason I chose this is because I've actually outlined this in a bunch of other videos, so I'll give you the Reader's Digest version. It's basically a lot of these companies that are able to pay consistent dividends over time and actually raising the dividends to keep up with inflation. It usually means that they have strong balance sheets and that they have strong fundamentals, as mentioned. So when they have a history of raising those dividends, that means that, hey, we're a solid company, we're managed properly, we're just giving you a little thank you in terms of a dividend for supporting our company and being a shareholder. So the nice thing about blue chip dividend investing is that you're focused on the underlying asset and the income that it produces, not necessarily what the stock price is on Monday or Thursday or next week. You're actually thinking about this from a very long-term perspective. So if you picture the dividend stock being a rental property, you don't necessarily care about the rental property's value going up and down, up and down. You care more about the solid tenants that are paying you rent every month, that are renting the property, producing you an income later on in life. And then finally, I really like the fact that you can drip and compound these dividend investing stocks. I keep saying dividend investing, dividend paying stocks. And that's because you can do a dividend reinvestment program, which is basically taking the dividends that these stocks pay you, buying more shares of that stock by reinvesting the dividend, and kind of creating a snowball later on in life. So picture a very small snowflake rolling down the hill and becoming a huge avalanche in retirement. So the stocks that you own pay you a dividend, you reinvest it, and not only that, time in the market allows you to compound these returns as well. The third and final way that you can invest your $1,200 stimulus check is by buying Bitcoin. Bring on the hate, baby. Let's go. In the comment section, Bitcoin's dead, crypto's done. Great. Hear me out on this one. So if this was any other amount of money, whether it was $100 or $1 million, I would not be recommending something like this. I would say you can do, for another high risk opportunity, you can do options, futures, Forex, other cryptos, peer-to-peer lending, go to the casino for all I care. I don't care. But at the end of the day, $1,200 is kind of the sweet spot right now to get a little taste of what Bitcoin is. So this is not me shilling for Bitcoin. I'm going to give some cons at the end here, as you can see. But at the end of the day, I think $1,200 is the right amount of money for a high risk, high reward investment, okay? So the first thing that I like about Bitcoin is that it is sound money. It has the characteristics of sound money. So when we talk about characteristics of sound money, what does that mean? If you look at my other videos, I go into depth on this, but just the Reader's Digest version again is basically money should be durable, portable, divisible, uniform, be basically accepted as a form of payment. And I know it doesn't meet all these characteristics, but it has more than obviously fiat money right now. They're just printing trillions of dollars out of thin air. So Bitcoin is a hard money as opposed to a soft fiat money. It is deflationary. So what does deflationary mean? Deflationary basically means that your purchasing power is actually increasing over time as opposed to be decreasing with an inflationary asset such as fiat. So, you know, when your grandpa said, oh, back in my day, you know, a gallon of milk was 10 cents, now it's $5. That's an inflationary money, okay, inflationary currency. The fact that it's deflationary is because there's only 21 million ever made, plus, you know, a couple 100,000 here or there, depending on what blogs you read. But basically, just use 21 million as the benchmark. So that's why it keeps going up in value, because it's harder and harder to mine Bitcoin over time. It's a non-correlated / asymmetric asset, meaning that it's not correlated to other commodities, stocks, gold, precious metals, etc., etc. So whatever the S&P 500 is doing, that doesn't necessarily mean that it's going to affect Bitcoin in the same way. So you may have noticed when the stock market crashed in March, you noticed Bitcoin drop as well. There's only been a few periods where it's been correlated like that. It's historically proven to be uncorrelated and asymmetric. And then it's super high risk, super high reward. You know, you may lose everything. You may go up to $20,000 per Bitcoin. Some people say $100,000 per Bitcoin. But obviously that's all speculation. And then finally, just to be objective, the cons, it largely depends on internet access for payments to go through still to this day. There's ways to do it without the internet, but you still need access to the internet pretty much for the everyday person to be able to take advantage of it. It's highly volatile, which you've seen. It went from like 7,000 to 3,800 overnight, and then back up to like 5,400. And I may or may not have bought it at that price. Wink, wink, nudge, nudge. But basically, you know, high volatility is something you're going to have to live with. And then also it's prone to scams. So everyone remembers like BitConnect and all that stuff, you know, from a few years ago. So this is it, you guys. I hope this low risk, medium risk, high risk profile is a good way to invest this $1,200 stimulus check. At the end of the day, if you've already got a lot of these boxes checked, or if you already own all of these assets, take the $1,200, go to the casino, put it on black, and if you make it, send me the PayPal. It's down in the link below. And if you lose it, forget I ever mentioned that, okay? So have a great day, you guys. Hopefully you got some value out of this. And as always, have a prosperous day. I should be shilling these Bitcoin affiliate links. I'm going to put my Coinbase link down in the description below and see if anyone clicks on it. Hey, Coinbase, you get 10, I get 10. Let's go.